Hi friends. Dollar rupee has had a fantastic trend over the last 5 weeks. Right from 56.20, it has come down to 51.35, bounced all the way to 53.20. After that, over the last couple of days, we have seen a sort of a choppy range bound kind of sessions between 52.5 and 53.20. Over the short term, these would be the contours of the range, the 53.20 on the upside and 52.5. The question is what's keeping the dollar rupee range? It's two important factors. One is the macros. If you look at the September trade numbers, the external trade, the India's merchandise trade balance, we had a deficit of over $18 billion. That's quite a lot, considering that for the first 6 months of this fiscal, the trade deficit of around $89 billion is equal to where we were same time last year. So unless there is a significant improvement over the second half of this financial year, we will be over dependent on the inflows, which means Indian rupee will again become a high beta on the global risk sentiment, because when a country becomes too much dependent on capital flows, then the factors which drive the capital flows, like what's the scenario in Europe, what's happening with China, what's the economic outlook, what the central banks would do. So we keep moving with this, how these factors are shaping up. Not much of central bank action is expected over the next 1 month or so, because the US central bank, they have already acted. The European central bank, they have already acted. The question remains, would Chinese central bank come in and step in? There also the political transition is taking place, so it will take a month or two. So there also not much of actions anticipated, apart from a few tweaking of the policy tools like a RR cut, or say infusion of liquidity through their banking channels. But those won't have a much impact on the markets. So what we are going to see is more of a range market. 53.20, 53 quarter on the up, and 52.20.30 is going to find a strong support. In case if any risk materialize, be it from the domestic front, from the political front, or some negative comes from the Eurozone, then yes, then we could see a move in the dollar beyond the 53 quarter level, and in that case we could see a move as far as 53.80 or 54, but that only if some kind of a risk materialize. So we'll say play this market quite technically, because in a range market, playing it through fundamentals is not the way out, because it will keep whipsawing within this range. So 53 quarter goes, look to play long. As long as the 53 quarter is holding on the spot, any intra-week rallies, you can create shorts in the dollar and look to cover around say 52.60 or 52.5, closer to 52.20.30. You look to build longs in the dollar. So that's how one should play. In the euro, 1.31, 1.32 would be the most optimistic level, which seems now, because above 1.32 the headwinds in the Eurozone are there. So it will be difficult for euro to sustain beyond 1.32, even if it manages to cross and trade for a couple of days. 1.28 is where it's finding support. So as long as the euro is not closing below 1.28, in which case it gives a technical breakdown, we believe buying on dips in the euro dollar is advisable. In GBP dollar, it's a much larger range, 1.58 on the down and 1.62 on the up. That seems to be the GBP dollar range. In dollar yen, 79.20 where it's getting stuck, and closer to 77.5 it's where it's getting bought. Thank you.